Okay, there was a change here. Welcome to everybody. Yesterday was International Labour Day. In respect of the working times of our translators and everybody, we have to make up a little bit of time. So I would like to ask your speakers and responders to be as concise as possible. The next speaker on the list is Louis Michel for the ALDE Group.
Je ne vous promets pas de...
Well, I don't promise to be short, as you've asked me to, because I'm a bit fed up of having to be short, brief, after having heard very lengthy speeches. You don't even get a chance to ask a question. First of all, what do you think about the bank's obligation, the lawyers and authorities' obligation to have a register of persons exercising significant control in business or organizations over and beyond the shareholders list? It wouldn't be the same, and it would give a clearer view of the beneficiaries in the company. It would have to be made available to the public for verification and consultation too. The fourth anti-money laundering regulation recognizes the recognition of a central vista of the beneficial owners of foundations, and the member states had until June 2016 to adopt the necessary measures to introduce this rule into their national legislation. And I would like to know how far the member states have gone in the ratification process, because the legislation which governs the businesses and the governmental organizations varies considerably from one country to another. And two political points finally, colleagues. I think that our committee needs to have a debate, a quick one, but does need a debate on the strategy that we're going to adopt on this question of Panama Papers. So either we go out of this committee meeting with a plan, an ambitious one, to adopt strong recommendations, which is what the second speaker was calling a maximum compulsory, precise, strong basis to commit the member states, and it will be up to us then to call upon the member states to implement a reform and recommendation program. And we have to make sure that the member states know who knows what in the EU on this question, which is a very serious one. So we've got a choice. This is option number 2. Who wants to continue to advocate the policy of small steps, cooperating better, denouncing better, but it basically boils down to a talking shop which doesn't really tackle the nub of the matter. I think it's about time that we took a final decision. We really need to have a political debate so that we know what approach we're going to follow. Thank you.
So now 2 minutes left for the answer, unfortunately.
Well, the second question was about the implementation of the money laundering directive. The fourth money laundering directive actually doesn't have to be implemented until next month. So member states presumably have been progressing with that. Certainly it's been progressing in a number of member states have been adopting legislation to implement this. And certainly the idea of having registers of beneficial ownership will be valuable in assisting professionals in understanding their obligations and making sure that they are not facilitating these sorts of activities.
And maybe on the register of involved persons. Of course, we deal with entities in most cases that are outside the jurisdiction of the EU. So this, in order to be effective, most probably this register should also cover these entities and the involved persons in those entities. At the same time, we also see, besides nominee shareholders, there are also nominee directors. So basically, people that are just forming a cover and not actually conducting the activities or directing the activities in the entities. So this is another point that needs to be taken into account when such a register is designed.
Thank you very much. And next speaker on the list is Matt Carthy from GUE NGL, and also he's from the same group as me. I will have no remorse on the speaking time.
It is, as usual, the Germans picking on the Irish. Chair, thank you to the speakers and to the researchers for their work. We appreciate the fact that many of the, or some of the comments proposed by our groups have been taken on board in the final study. Just a couple of short comments in relation to the study on advisors and intermediaries. I think first there's the issue of language, and often the term intermediaries, in our view, implies almost a passive quality to a lawyer or a tax advisor, where in many cases the person we're talking about is actually pushing a product or promoting, in some cases, the use of illicit financial structures. So the terms perhaps promoters or enablers could be used as possible alternatives to clarify the real work that they do. I know the term promoters is used in legislation in Ireland that was introduced to create a mandatory disclosure regime, and perhaps it would be a more accurate description in the relationship we're talking about here. I'm wondering if you have a view on that. Regarding the policy recommendations, among other things, the study proposes further self-regulation in independence and responsibility standards through both hard and soft law. I think if there's a lesson we've learned from the beginning of this inquiry is the limitations of internal ethics codes of professional bodies in preventing enablers from promoting offshore activity. I'm wondering if you came across any of these limitations in your research. I wonder if the second speaker has any examples of best practice or positive experiences in any member states relating to hard law. And finally, one of the options being discussed in the Commission's consultation on disincentives for advisors is sanctions for non-disclosure by promoters. I wonder if you have any views on this option. 2 minutes exactly, Chair. I wish.
I noticed.
So thank you for your questions. On the intermediaries being promoted, I think we have used a very broad definition of intermediaries. So not only basically the advice part, as was mentioned in the presentation, but also the creation and maintenance of the offshore structure and even the enforcement of the offshore structure. So in that sense, then promoters might be just too narrow to cover that whole process. But I understand, especially for that first part, if you look only at advice, it might be a suggestion to consider. If I look also on the independence and responsibility, recommendations we do, basically because I was contributing also to the report of Ian, I refer in the recommendations to his report, because in that report we elaborate much more on independence and responsibility as well. So that's it's not the case that that we're only promoting soft law for advice and intermediaries.
I would agree with that comment on the scope of the term intermediaries. We're not only concerned with aggressive promoters, we're also concerned about general standards for firms that think they are not involved in promotion, and therefore it's valuable to use a broad term. Concerning self-regulation, part of our recommendation is that representative bodies as such should not be doing the regulation, but rather bodies that are devoted to regulation. And in this regard, it's probably worth extending our recommendations to pick up an idea which has just been announced in the UK, I'm afraid, of a supervisory body for self-regulatory bodies on the money laundering side. And part of the element of having a standard for a code of tax conduct with not only best practice guidelines but also peer review is to ensure that it's not purely a matter of self-regulation, but that the review can be not only of the terms of the code but of the manner of its enforcement. So in terms of best practice, we certainly have seen in a number of these jurisdictions that have adopted disclosure regimes and similar regimes with appropriate penalties that there is a significant effect on the behaviour of advisors. One element that could probably be strengthened is how it relates to offshore activity. No, the focus of national law, as I said, with regard to the definition of tax crimes, is very much on offences against the national revenue, which reflects an old principle of international law that countries do not enforce other countries' tax law. But as we move into the era of mutual assistance under the EU directives and under elements which are increasingly being included under the OECD regime for mutual assistance, we need to think about how to incorporate those ideas into the conduct requirements on tax professionals.
Thank you very much. La prochaine intervention du Pascal Durand.
Next is Pascal Durand of the Greens.
Merci, Monsieur le Président. Très rapidement.
Thank you very much, Chairman. Just 2 or 3 small questions to get your opinion. The first of those questions is about the status of the intermediaries. Don't you think that we should consider them as to be co-perpetrators of fraud rather than simply punishing the customer? So isn't that something to be pursued? All intermediaries should be considered as co-perpetrators or aiders and abettors. Then we've got these opinion letters which basically exonerate a number of operators in these tax schemes. And these letters of intent and things like that. Would you confirm that my impression, and shouldn't these be banned? Third question. There's a lack of information on residents. There is information provided to tax administrations, but it depends on whether there is a passport or residence of the person concerned in that country. Have you seen that? Are there people actually taking residence for that reason? Thank you very much.
Well, regarding the status of intermediaries as co-perpetrators of fraud, well, it depends on what they're actually doing. In some cases, they will be. This legislation that I discussed for liability on firms, in some cases, the liability for facilitation on the individual advisor will in fact amount to aiding and abetting. It depends on what's actually been done. But if the advice that's been provided is general and the implementation has been done by other practitioners not directly involved, then it may be harder to say that it is co-perpetration. And this is one of the problems with the networks of advisors that develops. It's a question of what can we actually demonstrate. In terms of opinion letters, well, my hesitation would be that opinion letters are not only given about tax matters. Opinion letters are a core element of legal structuring. There may be questions about them in regards to many elements of legal structuring, which is probably a wider question for the legal profession. And I'm not sure that a tough rule with regard to tax would necessarily be productive, because there are many transactions with a tax element which are not intended to be abusive, where it is very important to the transaction that the parties have some sense of the reliability of their tax advice.
So then there is one question remaining regarding the number of basically people having double citizenship as well as visa or basically these money for residents or investments for resident schemes, whether this is increasing. I'm not 100% sure, but I think in the last few years you have seen more countries that offer these kind of schemes. This is just from outside observation, so it needs to be checked whether this is more and more of an issue. In the Panama Papers data set, we can only see that there are certain countries overrepresented based on their number of citizens, as well as that some names don't appear like from a certain country where basically we see that they are located. So that's what we can say about it based just on the Panama Papers.
Thank you very much. As far as I can see, EFDD group and ENF have not notified for this first panel of any speaker, so if those groups would not protest, I would then have our last speakers on the list from EPP, which I do think is Mr. Rosati. Is that correct?
Yes, thank you, Chairman. I understand from what you told us that that these facilitators, intermediaries, are under a dual system of external regulation and self-regulation, with proportions differing between countries. But I also understand that this is not a very effective system in preventing these professions to engage in some harmful tax practices. There's been so many cases of these engagements that we can have a very critical assessment of the working of the whole system of external regulation and self-regulation. What is your opinion? I haven't, unfortunately, I was late. I couldn't listen to the beginning of your presentation. But what's your opinion on imposing much stricter legal obligations on lawyers, tax advisors, accountants, to refrain, to forbid them actually to get involved in all sorts of tax planning, and to report those cases to tax authorities if they arise, and how we could, is it enforceable in practice, and to what extent we could, in such a case, reconcile the need to serve the interests of the client with the requirement to comply with the legal obligation to refrain and to report on all attempts by their clients to reduce their tax obligation legally or illegally.
Well, that's a very interesting and challenging observation. I think the core comes in your reference to the concept of involvement in tax planning. And what do we mean by tax planning in this context? Clearly, professionals should not be involved in facilitating tax evasion. That ought to be self-evident. The concern is that a lot of these offshore structures involve elements of evasion. It is much less clear that onshore advisors, the extent to which onshore advisors are actively involved in the evasive elements of those. There is another concern about abusive tax planning, which is trying to manipulate tax laws in ways that are pretty widely accepted not to be intended. Very often when people speak in defense of that activity, they begin by saying, yes, but it is perfectly legal. I always find that an inappropriate response, because the whole point is that the whole point is that they are imperfectly legal. And that relates to this concept of the opinion, which gives an opinion on the likelihood of effectiveness. They may or may not be effective. They are based on a claim that the interpretation of the law that they are based on is a valid one, which has to be proven in the fullness of time. But they are based on an assertion of legality. And it seems to me it's very difficult to figure out in advance where to draw the line, which is why we favoured a recommendation of a code of conduct to essentially say to professionals, you have to think about this, and you have an obligation not to go beyond the line, but also as a professional to consider where the line is and to get the advice of your colleagues in your profession if you have any question about it, and the guidance of colleagues in your profession if you have doubts about it. So I think it is difficult to come up with something that is enforceable with regard to all tax planning. whether we can do more to ensure that elements of evasion are not creeping into multinational structures is another one where the elements of the lack of information, which William Peters' presentation has shown, and which the value that comes out of the revelations from the Panama Papers shows how critical information is to this. So you are right to ask the question, would such obligations be enforceable? And it's difficult to give a very distinct answer to that question, unfortunately.
So, thank you very much for that. I would like to say thank you to the researchers, Mr. Dr. Ian Ruxon from London School of Economics, and Willem de Graan. And I would also would like maybe to have your consent that if some of the political groups would have targeted questions, that we could send those to you. I think there are a lot of remaining questions, for example, on the role of lawyers and how we could regulate them, where we could keep some form of exchange. Thank you very much. And our next researchers are already in the box like a good British racing horse, I guess. So we will move swiftly to the second panel, as we are now 10 minutes behind, but we will make good on that. We will be dealing with a study on assessment of the legal, political, and institutional framework on offshore practices related to tax evasion, money laundering, and tax transparency in the EU overseas countries and territories, in short OCTs. And we'll be having Professor Dr. Herman Bröring from the Groningen Center for European Financial Service Law at the University of Groningen. Welcome. We'll be having, and he will be presenting the case of the OCTs of the Kingdom of the Netherlands. Then we will have Dr. Peter Clack, Associate Professor at the University of the West of England, Bristol, UK, and he will be presenting the OCTs of the UK. And lastly, we'll have Professor Alexandre Maitron de la Motte from University of Créteil, Paris, and he will be presenting the case of the French OCTs. Welcome to you as well. Each of the speakers, I would ask you if you can manage between 12 and 15 minutes, that would be very welcome. I will spare you my introductory remarks, which also saves time, and then we can move straight to the first presentation. May I ask Professor Bröring to take the floor first?
Thank you, Chair. The Kingdom of the Netherlands has a quasi-federal character. Its legal, political and institutional framework is rather complicated. I guess that only 5% of the Dutch population has knowledge of this framework. And for getting grip on this framework, a multi-level attitude can be very helpful. The next slide presents this attitude, and every level corresponds with a chapter of our report. The Kingdom of the Netherlands is member of the European Union. Nevertheless, the European law is only fully applicable in the geographic European part of the Kingdom. The Kingdom consists of 4 countries, namely the Caribbean countries of Aruba, Curaçao and Sint Maarten, and the country of the Netherlands. And please mind, Annex 2 of the Function Treaty speaks of the Netherlands Antilles. The Netherlands Antilles was a country within the Kingdom and consisted of Curaçao, Sint Maarten, Bonaire, Statia and Saba. But since 2010, the Netherlands Antilles doesn't exist anymore. The current 3 Caribbean countries have 50,000 till 150,000 inhabitants. Since 2010, when a restructuring within the Kingdom took place, the much smaller islands Bonaire, Statia and Saba are part of the country of the Netherlands. And please mind The country of the Netherlands has a European part as well as a Caribbean part, the so-called Caribbean territories or the Dutch Caribbean. Since the earliest start of the European Union, all Caribbean islands, so the Caribbean countries as well as the Caribbean territories of the kingdom, have the OCT status. And today they have still this status. Consequently, European law is only fully applicable in the European part of the country of the Netherlands. Of course, regarding their OCT status, some European law is applicable in the Caribbean countries and territories too. I will not go into the details because the implications of Part 4 of the Function Treaty and the Overseas Association decision are relevant for all OCTs of all member states, not only for those of the Kingdom of the Netherlands. In our report, we discussed the case law of Antillean rice mills and Eeman and Zevinger, because both cases are especially related to the Kingdom of the Netherlands. Furthermore, we would like to emphasize the powers of the European Commission to reduce or withdraw financial aid for OCTs. In our opinion, the legal powers of the European Commission pertaining the Overseas Association decision and also those of the European Anti-Fraud Office are very important regarding their direct effects for economic positions and political relations. We would like to recall the preamble of the Overseas Association decision, which stresses the need of convergence in the OCTs with internationally agreed standards in the area of financial services. The role of the European Commission and the European Anti-Fraud Office is especially important where on the Kingdom's level powers are weak or even lacking. Although the Kingdom of the Netherlands officially consists of 4 equal countries, in practice, of course, the country of the Netherlands is very dominant. This country is by far the biggest country and has by far the most human and financial resources needed for lawmaking. This means that the law of the 3 Caribbean countries is strongly inspired by the law of the European Netherlands. The Dutch law from The Hague can be seen as legal transplants. Legal transplants in the Caribbean. To put it briefly, most legislation of the 3 Caribbean countries is a previous version of Dutch legislation. And since Dutch legislation is closely based on European law, certainly in the field of tax evasion, money laundering and tax transparency, one could say that legislation of these Caribbean countries is largely based on European law, although often an earlier version of this law. The legal situation of the 3 Caribbean territories of the country of the Netherlands is quite different because these territories are governed by the Dutch legislator in The Hague. I come to that later. Correct understanding of the formal and actual legal, political, and institutional framework of the Kingdom of the Netherlands requires a notion of the sensitivity of the relations across the Atlantic Ocean. Of course, the colonial time left its marks, or more precise, its scars. The sensitivity has also to do with cultural differences and the imbalance in power between the European Netherlands and the Caribbean countries and territories. Anyway, the governance of the kingdom, actually the Dutch government in The Hague, is very reluctant in intervening in the policy of the Caribbean countries. According to the kingdom's government, infringements, for example, of environmental legislation implying infringement of fundamental human rights, of the European Convention on Human Rights, doesn't justify intervening in the policy of a Caribbean country. Only when a constitutional element is at stake, the kingdom uses its power to intervene. And a recent example is the kingdom's persistence in holding elections in Curaçao, which took place last Friday. It must be recognized that the Caribbean countries of the Kingdom of the Netherlands are small-scale societies. And in such societies, it's difficult to suppress partiality and nepotism and to avoid polarization. And the Caribbean people are aware of this. Although they complain about the dominance of judges from the European Netherlands, most of them accept the necessity of these impartial and independent judges for the sake of the rule of law and of stability, which are so important for the economy and especially the touristic sector. The Charter of the Kingdom of the Netherlands is the Kingdom's written constitution. Article 3 identifies the powers of the Kingdom, and these powers are specific and limited to defence, foreign affairs, citizenship of the Kingdom, and nationality of ships. Other Kingdom's powers are the power to nullify a legal provision of a Caribbean country and the power to interpose itself when a Caribbean country fails to fulfil its obligation. An important but vague obligation is the duty stated by Article 43, inter alia, to consider rules of good governance. Regarding money laundering, tax evasion and tax transparency, the three Caribbean countries are familiar with extensive legislation, as I said, strongly inspired by Dutch legislation from Europe. Therefore, one can conclude that the formal legislative powers are sufficient for fighting money laundering and tax evasion and ensuring tax transparency. At the same time, it's no secret that in the Caribbean countries the implementation and enforcements generally are rather weak. This is a matter of shortage of money and human resources and for sure of prioritization. This is a general finding indeed. We have the impression that money laundering, tax evasion and tax transparency have a rather high priority. Firstly, this is the result of the special interest of the Dutch and Kingdom's governments in the financial situation of the Caribbean countries. As a consequence, the country of the Netherlands promotes and takes initiatives to cooperation within the Kingdom and between the Caribbean countries. And this cooperation is reflected for example, by the Kingdom Act on financial supervision in Curaçao and St. Martin and the National Ordinance on Aruban temporary financial supervision. Both regulations establish a board of financial supervision. And secondly, all three Caribbean countries are familiar with a central bank supervising over compliance with the legislation aimed at combating tax evasion and money laundering and ensuring tax transparency. The Central Bank of Aruba and the Central Bank of Curaçao and St. Martin. And both Caribbean banks are working together closely with the Central Bank of the European Netherlands. However, regarding the functioning and integrity of the Central Bank of Curaçao and St. Martin, the Dutch Central Bank has to expand its supervision activities in both countries. Furthermore, the public prosecution services cooperate closely also in financial and tax matters. The legal, political and institutional framework of the Caribbean territories of the country of the Netherlands, Bonaire, Statia and Saba, is quite simple. These territories are part of this country. Consequently, their legislation on tax evasion, money laundering and tax transparency established by the Dutch government in The Hague. And the implementation and enforcement of this legislation is supervised by Dutch institutions, the Dutch Central Bank and the National Authority of the Financial Markets. And then I come to my key findings. As I explained, we used a multi-level attitude to get grip on the legal, political and institutional framework. On the level of the country of the Netherlands, there are very good opportunities for exerting influence on the OCTs in the fight against offshore practices. The territories involved, namely Bonaire and Statia and Seba, are part of the country of the Netherlands. They are under clear and tight control of The Hague. Their legislation on tax evasion, money laundering and tax transparency is Dutch legislation. The vast majority of the implementation and enforcement is a Dutch affair too. On the level of the three autonomous or quasi-independent Caribbean countries of the Kingdom of the Netherlands, the possibilities for exerting influence on the OCTs in the fight against offshore practices are rather weak. In Aruba, Curaçao and Sint Maarten, the law on the books is fine. However, the law and practice is quite different. On the level of the Kingdom, we must conclude that the relation between the European Netherlands and the Caribbean islands of the Kingdom of the Netherlands is ambiguous. Especially the autonomous Caribbean countries of the Kingdom, Aruba, Curaçao and Sint Maarten, have a position between dependency and independency. And this in-between situation, the authorities of the European Netherlands are they act with great caution, I have to say. The formal powers of the government of the Kingdom, dominated by the Dutch government, are very limited. These restrictions, combined with shortcomings in implementation and enforcement in the Caribbean countries, is partially compensated by cooperation, often initiated by the Dutch government in The Hague. Therefore, a key finding is that good governance is not guaranteed in the Caribbean countries of the Kingdom. In our opinion, the few and soft powers of the Kingdom of the Netherlands concerning these countries can be complemented on the level of the European Union. Consideration should be given to subsidy competences of the European Commission within the framework of the overseas decision and the powers of the European Anti-Fraud Office related to European funds for OCTs. And I'd like to finish with a few remarks about the future of the Kingdom of the Netherlands. This future is full of uncertainties and risks, especially the situation in Curaçao and Sint Maarten seems to be very fragile. The vast majority of the Arubans want to keep and intensify the relation between Aruba and the Kingdom, and also the European Union, is my impression. The biggest party is still advocate of the outermost region status instead of the OCT status. However, in Curaçao the population is deeply divided. Last week a small majority chose in favor of the Kingdom, but it was really a small majority. And in the future the page can be turned. Because of its continuing corruption problems, St. Martin will draw much attention to. The French frameworks can be judged as a model for the Kingdom of the Netherlands, if only there was not such a great gulf between the best ideas and the political reality. In the end, the concern for money laundering, tax evasion and tax transparency in the overseas countries and territories of the Kingdom of the Netherlands is an ongoing theme. Thank you very much.
Thank you very much indeed. And my Dutch colleague from the Secretariat complained about how I spelled Groningen. So she explained to me it's Groningen. And as I know the Dutch football player Ruud Gullit from my childhood quite well, I should have done better. And I apologize to all the Dutch people. And the next speaker would be Mr. Kleck. The next presentation.
Thank you very much, I just want to provide a brief overview of the territories, as my colleague did in respect to the Dutch, both in terms of their constitutional relationship with the United Kingdom and their economic structure, which is very important, to say a little about the legal, political and institutional framework, which includes the day-to-day relations and influences that impact on the offshore financial sectors of the territories, and also the broader political and economic context that shapes the UK's approach. And finally, a few conclusions and recommendations. First, an overview of the territories. Now, of course, there are 14 overseas territories, 12 of which are associated with the EU, but 6 are considered here, and they're listed on the slide. Unlike the French and the Dutch territories, each territory has a separate constitutional relationship with the United Kingdom. There are certain similarities, of course, but also important differences based on the particular histories of the territories. For example, whether they were part of regional integration groupings, or whether one territory was actually overseen by another territory. And those factors have had an impact on the degree of constitutional freedom these territories have had. But fundamentally, there are certain key legislative and constitutional provisions underpinning relations, and they come wholly from the United Kingdom. So the legislation which is in place to define the nature of the relationship is from the United Kingdom. The constitutions are enacted by the United Kingdom, and the governor representing the UK plays an important role. So at least on paper, there is apparent UK supremacy over the overseas territories. However, as we'll see a bit later on as well, the balance of power and authority are not so clear-cut, in particular because the territories have negotiated more autonomy in recent years. Economically, all but Montserrat are economically self-sufficient, with relatively high GDPs per capita. But their economies are dependent on one or two key industries. So the issue of vulnerability and sustainability are concerns. And this is an important issue to which I shall return. In terms of the legal and political oversight of offshore finance, all the territories, of course, have an interest in offshore finance that we're considering today, although some more than others. So we're really focusing on the British Virgin Islands, which has a particular interest in company incorporation, the Cayman Islands in banking, and Bermuda in insurance and reinsurance. And there has been significant international and local action to improve the oversight and probity of offshore financial centres, whether that's through the US Foreign Account Tax Compliance Act or the OECD's Common Reporting Standards. And the UK has also played a key role. One example in the EU Savings Tax Directive just over a decade ago, where basically the Cayman Islands was reluctant to adopt it, but in the end UK pressure enforced the measure on the territory. So there is significant action, but gaps remain in the regulatory framework. And from the previous panel, one issue is that the intent is there, but perhaps the capacity is not. So there are poor regulatory structures, particularly around inadequate staffing. So the numbers involved and the expertise that those staff have sometimes are lacking. There's often low compliance by the service providers themselves regarding key legislation. There are a small number of successful local prosecutions, which perhaps indicate the lack of capacity some of these territories have. Also, there are issues around lax ownership information and, in some cases, anti-whistleblower legislation. One example is in the British Virgin Islands. So as well as that broader framework, there are some important day-to-day political factors which impact on the sectors we're looking at. So in Anguilla, Montserrat and the Turks and Caicos Islands, the governor is ultimately responsible for the offshore sectors. So they oversee licensing of new business and work with each financial services authority in the territories. But here, even though the governor has ultimate responsibility for the territories, there are some muddying of the waters. One is the governor is accountable both to London, but also represents the territory. So some have called it governors wearing two hats, and that actually can make their role quite difficult to respond and react and report back to the United Kingdom and represent their interests, but also have a concern for what is going on in the overseas territories. The second is about resourcing. that the funding for regulatory oversight, even though the governor is ultimately in control, comes from the territory themselves. So each territory has control over their local budgets, can make decisions about how that money is spent, and offshore financial regulation is a decision that the local territories have to make in terms of how much resource is provided. The third is that the governor is parachuted in from London. They don't necessarily have a good and common knowledge of the territory which they're working in, and they have to adapt to the particular circumstances and the closed communities within the territories, and that sometimes makes their role quite difficult. In the larger territories, which have offshore financial sectors, the governor has no formal role. So there are financial services commissions, which have a degree of autonomy, but even here, as we've seen in the case of the Cayman Islands, the UK and the territories do work together. But it's important, and I think there are parallels here with the Dutch. The UK is reluctant to go too far in getting the territories to alter their regulatory frameworks. The UK is aware that territories have this local autonomy, and therefore they don't want to tread too much on what is happening within the individual territories. But it doesn't say there aren't cases where this has happened, where the UK has played a much stronger role. Now, you have to go back to 1989 and the case of Montserrat, and of course times have changed in terms of the autonomy that Montserrat now has. But then, in 1989, there was serious allegations of widespread money laundering across the offshore financial sector in the territory. And at that time, the local overseas territory government had control for the sector. But here, because the situation was so bad, the governor took it upon himself, with the support ultimately of the UK government, to bring offshore finance back under the control of the governor. So even though the UK is reluctant to use its full powers, and the recent discussions regarding the Criminal Finances Bill is a case in point about imposing public beneficial ownership lists, it is possible that the UK can use its full force to bring offshore finance under better control. And this leads into the broader political and economic context which is in place. So in terms of the politics, the UK, as we've seen just a moment ago, is reluctant to use its full powers. Rather, consensus and persuasion are preferred. The UK believes good relations with democratically elected governments are all important. And the UK believes that they should encourage the territories so they can run themselves effectively rather than being involved in a very heavy-handed way. The second is that even though the governors are in place and do have some quite strong constitutional powers, again, these are reluctantly used and only in the worst cases. On the other hand, governors can use their influence at the local level, but there are a few intermediate levers to affect change. So some issues, some problems which are perhaps in the mid-range, are difficult for the governor to address because he doesn't necessarily have the levers and influences at his disposal which are required. Also, there is a regular turnover of staff and loss of institutional memory in Whitehall. So, as part of the civil service, every 3 or 4 years, civil servants move on to different portfolios. And that is an issue in terms of learning from past mistakes and retaining that institutional memory. In terms of economics, the UK is strongly determined, and has been for a number of years, to ensure economic self-sufficiency of the territories, both under Conservative and Labour administrations. So offshore financial services are extremely important within this context of economic self-sufficiency. Any significant decline could lead to increased financial support from the United Kingdom, and the United Kingdom is very reluctant to countenance this option. Also, the territories believe that financial self-sufficiency allows additional political autonomy. So they wish to be and stand on their own 2 feet in terms of economic development. Second issue in terms of economics, of course, there are strong links with the City of London. From the very early days when the offshore sectors were established to the very present day, services and revenue flow between the City of London and the overseas territories. So that's a very strong bond. And finally, in terms of economics, there is some UK involvement since the 2007-2008 crash to try and tighten up the way in which economic policy and budgetary decisions are made. So the underlying determination of economic self-sufficiency has survived the economic crash a decade ago. So the UK has got involved in trying to reduce the expenditure within individual territories, to try and encourage territories to better manage their budgets. Initially, at the height of the crisis, when the budgetary situation in a number of territories was quite difficult, the Labour government in 2008-2009 suggested possibly that direct taxation could be countenanced within the Cayman Islands. But this was soon forgotten when the Labour government lost power. Also, of course, there is a key role for offshore finance since the economic conditions have become more difficult. So the UK influence is in terms of cutting expenditure where necessary, better budgetary regulation, but making sure the offshore financial sector, which is so crucial for their economies, is maintained. Finally, a few conclusions and recommendations. As we have seen, despite the fact that the UK is sovereign and has supreme authority over its overseas territories, the relationship is nuanced and often messy, with significant autonomy for the territories. In short, there is regular dilution and blurring of UK authority. The resulting decision-making can be complicated, slow, and frequently deferred. Also, as we've seen, the emphasis on the economic self-sufficiency of the territories is also a defining feature. Now, it's not to say the UK and the territories have not worked closely together to enhance how the offshore financial sectors are managed, but certainly more can be done. First, to try and encourage more resources to support regulatory frameworks and the weaknesses in actually implementing what has been agreed. To try and look beyond offshore finance and encourage a more balanced economy, and for the UK to play a much more active role in this from a developmental point of view. To consider how the wealth locked into the offshore financial industries can be better utilised to improve local development. So there is sometimes a disconnect between the GDP per capita figures and what's actually going on in the ground within the territories. To consider how the UK continue to play a supportive and engaged role in the territories, including in offshore finance. But of course, the elephant in the room is Brexit, and this will certainly narrow the opportunities going forward. Brexit will certainly exacerbate the increasing vulnerability for the United Kingdom and for the territories, and increased financial retrenchment will not help in terms of trying to improve the capacity of the territories to deal with some of these issues. Thank you.
Thank you very much. And as a last presentation, we move to the case of the French overseas territories. La intervention du professeur Alexandre Métro.
Give the floor to Professor Métro de la Motte, and the presentation is going to be in French.
Monsieur le Président.
Thank you, Chair. Ladies and gentlemen, members, it's a great honour for me to present to you the written work that I've done over the last months. I'd like to thank you for your invitation. First of all, by way of introduction, I'd like to thank the members of the service from the ex-post evaluation unit who've accompanied me and with whom we've had very good cooperation. The scope of this study is the overseas countries and territories of France. There's 5 of them at the moment, but that list is subject to changes in terms of institutional changes. After the next slide, I'll show you a map where the territories are St. Barthélemy, St. Pierre and Miquelon, Wallis and Fortuna Islands, French Polynesia, and then a group constituted by 4 territories of New Caledonia. That's quite a broad archipelago with different subsets. The list has changed because St. Barthélemy wasn't on it originally in the treaty of the functioning of the EU. St. Barthélemy wasn't originally an OCT. It was a local authority of a department or overseas territory, Guadeloupe. And then St. Barthélemy was separated from it to become an overseas territory in its own right. And then originally we had Mayotte Island on the list, but it's now become a DOM, overseas territory. The map you can see now shows you the different countries on OCTs. Article 73 and 74 of the Constitution gives different statuses, overseas countries and territories. It's the result of history. What you can see in blue on the map are entities that are both departments and regions of overseas. That's Martinique, Guadeloupe, French Guiana. That's on the Atlantic side. And then in the Indian Ocean, since 2014, we've got Mayotte, that used to be a PTOM, and then Reunion. In pink, you find Collectivités d'Outre-mer, COMs. These entities have a different statute to the department or region. Most of them under EU law are countries or overseas territories. If we look at the Atlantic Ocean, you've got Saint-Pierre and Miquelon in the north, then Saint-Martin, Saint-Barthélemy. Saint-Martin is not a country or overseas territory in the EU law, whereas Saint-Barthélemy used to be part of a DOM. It's now become an Outre-mer collectivité or municipality. Then in the Pacific, there are 3 archipelagos. There's French Polynesia, Wallis and Fortuna, and then New Caledonia. And there is some overlap between the French constitutional law and EU law. What you can see in red on this table are the groupings that are considered as outermost regions under EU law. They're not in the scope of the study for a simple reason. That's because primary law and secondary law apply directly to them. The French legislator has the objective every time it transposes a directive to apply them geographically to these territories. So the ones we're interested in are the ones in white in the left-hand column. In other words, Saint-Barthélemy, Saint-Pierre and Miquelon, Wallis and Futuna, French Polynesia and New Caledonia. Under French constitutional law, there are 2 types of legal regimes that apply to these groupings. It's what you can see in the middle where you see COM and overseas grouping. We've also got AS, that means assimilation, sometimes SP, that means specialization. In actual fact, using different methods, we can arrive at the same results at what we're looking at. When we have the assimilation regime, the principle that applies is that French law from metropolitan France apply apart from in exceptional situations. And later on we'll see that that applies in the area of tax, for example, defining the tax rate, but it doesn't apply for anti-money laundering or administrative cooperation. When we see the other regime, that's a specialization. It's a different regime that comes into play. In our study, however, that does lead to the same result. The principle is that the metropolitan law only applies if the French Parliament decides, only if they decide to extend them there. We'll see that in the area of tax, for the tax rate or the tax base, the overseas groupings are given a lot of leeway. However, when it comes to anti-money laundering or organising administrative cooperation, the French legislator always decides to extend the application of French law to the territory of these groupings. So ultimately, the result is the same for our study. There tends to be autonomy when it comes to tax rules, either for the tax base, the recovery rate, or the tax rate, or the tax base. However, under specialization, that will apply in anti-money laundering or administrative cooperation. There the French law applies. It's very important to note that these OCTs are not independent or autonomous. They don't have sovereignty. They just have competences as set out in the Constitution. In other words, according to the Constitution, it's the national law that decides what the OCTs may or may not do to the areas where they have transferred powers, autonomy or not. In other words, Metropolitan France can grant powers, but it means at the same time they can claim it back at any time. So in the area we're looking at, there is a certain degree of autonomy in the area of tax. However, there's no autonomy when it comes to AML or DAC. Just a few figures now for GDP, for population and the key sectors. There's one very important thing to point out in economic terms. The French OCTs tend to be quite poor and the standard of living is quite low. We can see for some groupings, financial assistance given by the Metropolitan France is quite high. French Polynesia or New Caledonia, the budgetary aid is above 1 billion for each of these two groupings. But if we look in detail at the activities, we can see that the public sector tends to be the key sector of activity, and it's financed by, in other words, by the French state. So three important issues here: tax evasion, money laundering, and fiscal transparency, which are in our study. And each time I'll give you the main findings. First of all, tax evasion or tax avoidance. We can see a fairly awkward issue. In other words, I found it very difficult to find data. There's a lack of data. It's often outdated data. If you look at my report and writing, some of the data goes back to 2011, 2012, and that's because the local authorities or administrations don't produce these data. The Court of Auditors has complained about this regularly, so have other auditing authorities, and certainly this is problematic.
We have a slight technical problem, but I would propose you continue and then we try to solve it in parallel.
Ok. Donc, on a ici une...
So there's a problem relating to the data, and we can try to reconstitute it using other methods. Now, is there a problem of tax avoidance from the French OCTs? The situation varies according to different territories. There are two OCTs that might be problematic because of the low level of direct taxes. Saint-Barthélemy, that's a choice based on their autonomy. There's no corporate tax, there's no income tax for residences. It's different for non-residences, and I'll come back to that later. In the three other OCTs, New Caledonia, French Polynesia, and Saint-Pierre-et-Miquelon, the mandatory taxation is at a similar level to other EU countries. So there isn't a low level of taxation either in terms of the base or the rates. And another problem is that there's a lack of resources for these authorities on the ground, so there aren't many audits carried out. In the study, I'll give you the figures. It shows that that there's very few tax audits carried out, which again means we have insufficient data. However, we have to put this into perspective and not exaggerate the risk of tax evasion through OCTs. And first of all, tax regimes are favourable for residents, but not favourable for non-residents who are subject to double taxation sometimes. With Saint-Barthélemy, you have to reside there for 5 years before you can get tax domicile. In other words, people would then be subject to double taxation. Another important point is the geographical distances. It takes more than 24 hours from Paris to French Polynesia. And then on the subject of AML, Another problem is that the local banking system is quite basic. It doesn't allow for sophisticated operations to be carried out. Then the second point on money laundering and French OCTs. Traditionally, the French legislator always extends to the French OCTs EU legislation. In other words, any time an EU directive is transposed, the French legislator doesn't have to do it, but it does tend to extend the scope of this legislation to OCTs. If there's an EU regulation which doesn't have to be transposed, law will then be applied to extend the scope to the OCTs. We can see, for example, with the recent directives and regulations, a law was adopted in 2016 to extend the provisions to French OCTs. And of course, there's a risk of non-application in these territories. Again, there's a lack of suspicious transaction reports. The professionals in the field, the intermediaries, must make a declaration if they consider there's suspicious activity. However, we don't see this happening very much in the OCTs. Furthermore, TRACFIN doesn't therefore carry out many investigations there because of the lack of SDRs. Another problem is a lack of data, and in particular, a lack of money laundering culture on the part of the local professionals. Again, we have to put this in perspective. In other words, the banking structure, we can see that the risks for money laundering are quite low. All financial establishments active in OCTs tend to be branches of companies actually headquartered in France. And the fact that we have a low risk, on the basis of the data I looked at the number of bank accounts opened in the French OCTs and the amounts of bank assets. All of this is centralized by the Banque de France. And we can see that the amounts in question in the OCTs are quite low. And with Wallis and Futuna, 70% of inhabitants don't even have a bank account. Then transparency, tax transparency, the laws governing exchange of data then between France and the OCTs, this works quite well. Generally speaking, France goes beyond the OECD standards. For example, the centralized tax authorities can carry out audits or on-the-spot inspections. But again, everyone regrets the fact that there's not enough data on the effectiveness here. If we look at the OECD report from 2013, the study group showed that France was exemplary, even though France sometimes worries about an asymmetrical relationship here. To conclude, we can see that there are very few risks which in theory and practice apply here as opposed to other EU countries and their OCTs. There are three factors. First of all, the control of the central government. Secondly, the fact that EU legislation is applied even if we don't have to. And thirdly, more generally, neither the economic nor the banking structures in the French OCTs would promote these unfair practices or harmful practices. And of course we can make improvements, improve the culture there, have more resources and raise awareness of the local population. So ultimately we conclude as to whether the French system could be a model, as the two previous speakers have suggested. In theory that sounds good, but of course it would be difficult in practice. Thank you.
Merci beaucoup, and thank you very much for keeping within the time limitation. I know that is a quite challenging endeavor with lots of informations. I think that all members also benefited today from some geography, at least I did, as far as I can recall. So we now move to the first speaker, which would be the co-rapporteur of the Pana committee, who's Jeppe Koffert.
Thank you so much, Chair. And let me be brief, because we have limited time. Thank you so much for your presentations. First of all, I'd like to say that what we look at also in the committee is the link between intermediaries and offshore centers, tax havens, secrecy havens, and I think there the overseas territories is very important to look at. So can you maybe enlighten us a little bit, from your research, do you see any key indicators that could define a tax haven or a secrecy haven? That's my first question. And secondly, in your view, what would be a kind of optimal criteria for tax havens? And thirdly, more to the rules and laws and enforcement, the standards that we have internationally on transparency and cooperation and so on, OECD and in the EU, how would you see that most effectively being implemented? Should EU have a more direct role vis-à-vis the territories, or is it sufficient that the countries that is part of the territories, the European Union countries, they have this role? Or do you see any ways forward in that respect to implement agreed international standards on transparency and cooperation and fighting tax avoidance and evasion? Thank you.
I would suggest each speaker tries to answer these questions in 1 minute, and we'll manage.
Thank you for these questions. The key indicators, when I understood your question well, about the tax havens, etc., the countries of the Kingdom of the Netherlands are, in our finding, not very important as tax havens. The main sectors, economic sectors, are tourism. When we take into account the very small islands, Seba, Statia, and Bonaire. Well, Bonaire has 17,000 inhabitants. It's small, but Statia and Seba, 1,500 or 2,000. And Seba, there's a medical school, 500 people related to the school. So the economy is connected to the tourism sector, and the tourist industry, well, there are the big international hotels, and they work from their side with international standards. So I don't think that the big problem is the tax haven sector and money laundering, etc., in the Caribbean. The criteria, well, the optimal criteria, of course, transparency is very important, sharp regulation, but as we have experienced today, that's difficult. The financial legislation is familiar with many open, many vague norms, and then as a consequence there's an important role for soft law, and that implies, in my experience, that transparency can be problematic. Regarding your third question, the regulation, type of regulation, a direct role, how can you improve the level of implementation? Well, that's a big problem when not regarding the territories of the country of the Netherlands, because, as I explained, that's just Dutch administration. But regarding the three countries, well, there are no powers for the kingdom, and of course certainly not for the country of the Netherlands. So there is a problem.
Maybe we could hear, because we have some time limitations, maybe the other two speakers could only come in on issues they would specifically like to complement. Sorry for that.
Sure, very briefly, I don't disagree with my colleague. I think one interesting issue when you visit the territories is just the extent of the interest they have in the offshore financial sectors in comparison to their size and to their population. So I think one issue which I touched upon in my presentation was just the issue of capacity, that actually regulation might be in place or is prepared to be put in place, but actually whether you have the real capacity to be completely confident that everything you should be doing, you are doing, I think that's a significant issue. And again, the nature of these small societies where everybody knows each other, so that where you have the confidence to actually speak out, whether there's that climate of openness within society, I think that's very important. And just finally, in terms of the EU role, I think for the territories, it was a great regret that Brexit happened. So I think they do really appreciate the opportunity to have a voice within the context of the European Union to talk about some of these issues and actually be sort of in the inside when these policies are being put together. So I think that's something which they'll sorely miss going forward.
Alors, des réponses aux 3 questions.
Yes, just to respond to the 3 questions. So first of all, on key indicators to identify a tax haven. I think there are 2 main indicators that you can use. First of all, is the tax level, how much tax is paid for a given transaction in the territory, and how much tax would be paid if that transaction were to be carried out in another territory. What would be the difference? Is it 10%, 20%, 80% of the cases? The other indicator is cooperation between administrations. In other words, when a tax administration of one country asks for information about a taxpayer in another territory, is it easy to get the information? Do you get a reply? Do you get a positive or negative reply? And if it's a yes, is the yes answer enough? In the OECD, we have the peer review system, which is a good method to identify the non-cooperative states and territories. On the identification criteria, that was the second question. I think you can use 3. Quantitative criteria, basically. How many companies are there compared to the number of inhabitants? And how can a state or a territory, where does a state or territory fit as far as the average is concerned? Would that number be an average that we see elsewhere? And another indicator is how many bank accounts have been opened in a state, and then compare that to GDP and the population. In other words, do a risk type analysis. And the third point is the weight of the financial sector, of course, so the more important it is, so the higher the risk. And then on the law and its application, what I said,
we have to, it's not your fault, it's our time management, but we have to move on a little bit, otherwise.
Donc, if you agree, l'Union européenne pourrait...
Perhaps the European Union could ask the states to provide more information on precisely how the legislation is applied.
Co-rapporteur of the ALDE group, Peter Jacek, is not here. If I see correctly, then we can move on to Mr. Ludek Niedermayer for EPP Group.
Thank you. It was quite interesting information. Let me just refer to maybe British situation as the example. What I'm really surprised is that at UK, there is a very stringent regulation of financial sector, transparency, anti-money laundering, and so on. So what's the logic in their territories like British Virgin Island to be rather on the opposite extreme? And especially when we had a debate here with the representatives of the bank, they said that within their territories, basically they retain exactly the same standard on beneficial ownership identification and things like that. So I wonder if you believe it's true, but at the same time, there are many banks actually operating there that are not part of the European groups. So. I'm just puzzled about the situation and who is actually benefiting out of that, except of those who are involved in those tiny islands with really extremely high proportion of offshore offshore financial services. So what's the logic in this setup? Isn't it too expensive way how to make sure that the islands don't need fiscal transfers from the center?
I would suggest that only one of the speakers takes the floor, and if the others have, let's say, conflicting opinions, then you could signal to us.
I wouldn't say that they're at the opposite extreme. I would say that they are relatively close to the expectations that the United Kingdom has for itself. But there are differences in approach, there are differences in funding and application, and that is something which the United Kingdom feels is very important, that the overseas territories are autonomous. The UK doesn't want to see itself as a colonial power any longer, and therefore is very tentative to engage except in particular circumstances. I agree with your point that perhaps it is sort of a lot to do and a lot to maintain just to avoid paying sort of budgetary support to the territories, but that is so deeply ingrained, I would say, within the part of sort of the UK government in terms of how they should relate to the territories, that they think that actually as long as a significant regulatory framework is in place, then that is acceptable to undertake. But it's also what else can take its place. So, you know, these systems have been in place 30, 40, 50 years, so they're so well entrenched, they're so dominant in terms of many territories, that it would take significant effort, significant resource, significant time to try and create a different way of development. And I don't think there is that political will or economic capacity to do that in any effective way.
Anybody wishes to compliment? No. Okay, great. Then we move, if you agree, Ludwig, there's no more follow-up, then we move to Mr. Juan Fernando Lopez Aguilar from S&D Group.
Thank you, Chair. I thank all of the contributions and the presentations we've had so far. I understand time is of the essence. So I'll try to focus on the UK overseas territories as defined in Annex 2 of the Treaty of Functioning of the European Union, because they represent a huge legal challenge for the rest of the European Union scale fight against offshore practices, money laundering and tax evasions. I think we've seen that somehow the French model basically applies when it comes to implementing EU standards in order to fight all of these issues. The Netherlands overseas territories go further, but I think the real huge challenge is the one posed by the UK overseas territories, and particularly under the light of the UK's announced withdrawal from the European Union following Brexit. That's my kind of a question, because we have seen that there is no, for the time being, legal ways to ensure the implementation of any EU laws as to these territories when it comes to countering tax evasion, money laundering or boosting tax transparency. So we have a real threat of territories not abiding to common rules of whatever kind, and harmful case of free riding. So as to your expertise, my question is there legal options available under EU law in order to come up with a common framework binding for the territories which do stay within the European Union, member states? Second, in order to counter the legal vacuum that we have seen in these territories in order to face those issues, and as regarding the consequences of Brexit for the Crown jurisdiction, will there be an impact, foreseeable impact, of a gain for those territories as a consequence precisely of Brexit, insofar as if we come up, according to the work ahead, within this Pana committee, we come up with some EU legal framework which is applicable to the territories of the member states which are remaining, the Netherlands and France, that money that is being enjoyed in these overseas territories fleeing to UK overseas territories, is there anything that can be done about it? Thank you.
Gracias, Juan, and he's also from an island, so he's very committed to that discussion. Maybe the British colleague would like to answer.
Sure. In terms of the first question, in terms of binding standards, my Dutch colleague actually wrote in his report a little about how he could see a way forward for the OCTs to be incorporated more effectively and have greater oversight on the part of the European Union. I don't necessarily agree with him, and if you look back to the case of the Cayman Islands, the European Court of Justice ruled quite clearly that the European Court and the European Union had no jurisdiction in terms of the EU Savings Tax Directive being introduced or implemented within the Cayman Islands. Perhaps my Dutch colleague can disagree. I would also disagree about the idea of a legal vacuum currently in place. I think there are concerns which I've highlighted in my answers and also in the presentations. But there's certainly be an argument from the United Kingdom and for the territories themselves that they do adhere to international standards. There's a degree of double standards on the part of those that criticise them because perhaps they're easy targets because of their small size. Not to say there aren't issues within them. And I get a sense, and all the territories, as I said, were very strongly committed to the UK remaining a part of the European Union. I think that gives a sign in terms of their role within the EU, the benefits they see as being part of the EU, the voice they have within the EU as well, and they fear in some ways the loss of that voice going forward. And I don't think it will be seen as an opportunity to exploit their newfound freedom for reducing the level of regulation and oversight of their sectors, because I think, you know, the United States and others, the OECD and others, will retain that significant level of pressure upon them. So I don't think the worst case scenario will happen. I don't think you'll see a significant flow of additional resources into these territories, because I don't think they want to be seen in that way. They want to be seen as credible offshore financial sectors. Of course, there's an argument around that, but I don't think they would go to the extent perhaps which some have indicated. But in terms of the EU role, perhaps I can defer to my Dutch colleague.
Yes, of course. Thank you. Well, as we concluded that the powers of the kingdom's government are rather poor, it could be an alternative to use the powers of the European Commission regarding subsidies. There are many subsidies from Brussels going to the OCTs, and well, everybody has the same experience that financial ties have a realistic character. And as the preamble of the overseas decision says, transparency, etc., integrity, good governance is an element of these subsidies, and why couldn't it be possible to withdraw subsidies when these aspects, integrity, the transparency, etc., are there are failures in this field, then that could legitimate the power of the European Commission to reduce or withdraw subsidies. And that's a very hard instrument, of course, but well, you need also hard instruments.
Thank you very much. If my eyes are not tampered somehow, I would say that ECR is not present. Neither is ALDE, like in terms of MEPs. I know that the staff is always present. Is that correct? Okay, then the next speaker on my list would be myself for GUE. That's excellent. My first question would be that one of the studies concluded that merely controlling the flow of investment and money to the EU overseas territories would be equivalent to simply shifting the problem elsewhere. I think this would refer, for example, to some means of source taxation, penalty taxes, and so on. Could you qualify how you arrived at that conclusion? Secondly, in a paper by the UK Foreign Office on the overseas territories, it's a white paper from June 2012, they conclude that as a matter of constitutional law, the UK Parliament has unlimited power to legislate for the territories. However, except one occasion this happened, such as its decision in 2009 to intervene and impose direct rule on the Turks and Caicos Islands. So the UK rather chooses not to exercise these powers. Would you agree with that? So there's no constitutional problem here, but rather the problems that you outlined already, that they are very reluctant to do so because they fear that they may lose their financial self-sufficiency. And lastly, if we look at all three studies, we included Danish, I think even Greenland was mentioned, and French OCTs, when they have not ever appeared in any tax haven list, but we did not include, for example, all relevant UK overseas territories. So in terms of methodology, could you comment on why you've done, amongst the three of you, this kind of selection? And we have also the problem that in the indexes of the three annexes, the indexes of the three annexes in the studies are a little bit different. So the comparability is kind of problem. Could you also respond to that, whether you could have a follow-up on this in terms of the study?
Perhaps I can answer the first question that was directed to me specifically. In theory, the government, through orders in council, have the power to legislate. So orders in council are basically derived from the power from the monarch. So orders in council don't need to go through parliamentary discussion or approval. So that's sort of an old constitutional mechanism which the United Kingdom uses, where appropriate, to put in place constitutions. And also to legislate where appropriate. I think you're right that it chooses not to do so in certain circumstances. It's very reluctant to do so. So the example of the Turks and Caicos Islands is one example. The end of the death penalty in the territories was a slightly more distant example. So too was the decriminalisation of gay sex in the overseas territories as well. So there has been a particular focus on human rights legislation, but more generally they are very disinclined to do that. They're wary of the criticism that comes their way. So when they took direct control over the Turks and Caicos Islands, for example, the level of criticism from the TCI itself, which perhaps was unsurprising, but also from within the Caribbean, from the Caribbean community as well, was significant. So the UK is very sensitive of using this sort of the nuclear option to impose its will on the territories. So it chooses to do so very, very carefully.
So perhaps I can say something brief on the methodology that we chose. Essentially, we chose to concentrate on the three most complex cases, which is why we decided to do the Denmark case internally. Also because it was not particularly problematic. As far as how to develop the study, it's true we gave a quite broad mandate to the experts because from the initial research that we did internally, we saw that they were quite different and complex. So we wanted to give them the liberty to explore the complexity, and I think the complexity did come out. And then at the end we did this chapeau introduction where we try internally to compare the 3 case studies on the different levels, so legal framework, economic, and the political influence that the given member state may have, trying to bring the 3 examples together in a comparative perspective.
Thank you very much, and because I don't want to appear unfair and grant myself more times for the answers than anybody else, just very quickly, would one of the speakers be able to address whether you would see a role for, let's say, source taxation, penalty taxation of financial flows to overseas territories to incentivize some changes? But just 30 seconds or something. Anybody?
Donc dans les pays ou territoires d'outre-mer français, on a...
Well, in the French overseas countries and territories, they have a number of withholding taxes. These are paid by the financial institutions as well. So there is already a withholding tax that already exists in part for incomes, and well, it's much harder to pay tax company profits rather than interest that's paid out by a bank.
Merci. The next speaker on the list would be somebody from the Greens, but I don't see anybody from the Greens here neither. So the next speaker on the list is by EFDD Group, David Coburn.
Thank you, Mr. Chairman. I disagree with Mr. Clegg. Not everyone in the offshore territories are unhappy about Brexit. They do not want EU interference in their affairs. Now, this interference in our overseas territories is unwelcome. The UK joined a trade agreement in the 1970s. We were conned by our government, which lied to us. Mr. Heath lied to us. We did not want to join a nation called Europe with a flag, an anthem, a government, and all the rest of it. Why should the EU interfere in British overseas territories? It is none of the EU's business. We are Brexiting. That is what the British people voted for. The EU's problem is that it is uncompetitive in terms of taxation. Overlarge government with a huge number of cadres, bureaucrats being paid enormous amounts of money and also very large pensions. The EU should stick to sorting out the huge financial problems it has caused by the collapsing euro, which has destroyed the countries of southern Europe. It is not an economic currency, it's a political currency. So the EU should not be dictating or suggesting to Britain ways of running its economic affairs either internally or externally. We seem to do a much better job of it than the European Union have done. Britain has decided not to interfere in the economies of our overseas territories. We've given them the latitude to create economies by being competitive in a tax manner throughout, and as long as there's minimum criminality, we will not interfere. We call it, in Britain, we call it democracy. In France, they just tell their overseas territories what to do. It's an entirely different thing. This democracy is something perhaps the EU should learn from. That's why we're leaving. We want our democracy back, and we do not want interference in either our domestic economic affairs or our offshore economic affairs. We can leave that to Her Majesty's government to deal with in due and proper form.
So anybody interested to answer? Maybe the Queen or somebody else? Okay.
Just very briefly, the OCTs were certainly concerned about the impact on Brexit on their affairs in terms of free movement, in terms of access to the single market, in terms of the resources which the EU provides to help with their economic development. And it was clear, as in the vote in Gibraltar, they didn't want the UK to leave the EU for those reasons. Now, there are wider reasons regarding offshore finance, but I think there was a strong view amongst the territories, and they commissioned a couple of reports around the vote to make clear their concerns about what would happen if the United Kingdom left the European Union. And I think we'll see the effects of that over the next few years.
Can I just reply to that? Well, yes, but they wanted to remain British, especially Gibraltar. And a lot of these countries, especially Gibraltar, would be an awful lot worse off if they're part of Spain. They could join the enormous unemployment that Spain has. And its individual selling point, Gibraltar's individual selling point, would be completely lost if they were to join the rest of the Costa del Sol. I don't think it's the best thing in the world for Gibraltar. And the rest of the countries, quite frankly, they would have the similar problems. And may I tell you, sir, it is not the EU giving them development money. It is the British taxpayer and the German taxpayer who put the money in. The European Union has no money. It's bust. The money comes from British taxpayers and gets filtered through to those colonies. Let's cut out the middleman and the great big black hole in Europe, and let's send it directly to our own colonies. I think it's a much better idea.
May I have a humble suggestion? Because there's a famous British band, I think it's called Oasis, and they had a song, it was called Don't Look Back in Anger. So Brexit is a fact, we'll deal with it. And I think, Mr. Coburn, you're also paid by the British taxpayers as well. I think we can leave it here unless... Me as well, that's true.
Because we are the only contributors apart from the Germans. So there you go.
Okay.
We're all paid by the British taxpayer. Isn't that wonderful? I think a round of applause for the British taxpayer and the German taxpayer is due. Thank you.
A very short comment by Mr. Clegg, and then we move on.
Unfortunately, with all these things, it's not a zero-sum game, as you may have indicated. So that's one thing. And the issue is then make representations to the British government that actually, with all the claims on extra resources which might be freed up as a consequence of Brexit, that a decent amount and an equivalent amount goes to the overseas territories. As of now, that hasn't been committed.
Well, I'm all for that. But as I say,
I would suggest we leave it here, and the next speaker...
Overseas territories will be much better looked after by Britain than by putting money into the European Union, lots of it disappearing and then some of it filtering out to our territories. Let's just cut out the middleman.
So we got the point, the essentials of the argument. I think the next speaker on the list is by Ian F., who's not present. So the last speaker would be Mr. Rosati. I caught him by surprise. Okay, so there's a big surprise at the end of this day. We managed to come in within the foreseen time limitations. I would like to thank our researchers for being available for the discussion and maybe for possible follow-up questions. Now, I would like to invite the co-rapporteurs for concluding remarks. Since the co-rapporteurs are not there, I invite myself to finally thank the participants to this meeting, the translators, for having to translate everything we say, sometimes very fast, and to the group staff who were so patient again to spend their evening with us. We don't have anything under any other business. The next meeting will be on 4th of May 2017 between 9 and 12:30 here in Brussels. Thank you very much. Enjoy your evening.
No round of applause for the British taxpayer, eh? I know who pays my bills.